Hello everyone, and thanks for tuning in to the Financial Investor channel. My name is Brent, and today we're going to be taking a look at three stocks that went down quite a bit today on Thursday. During the day, it was announced that Amazon will be selling, well, they'll be teaming up with Sears and will be selling some of the Kenmore items from Amazon. So some of the retail businesses such as Home Depot, Lowe's, and Best Buy, they took quite a bit of a hit, even though they're not, Best Buy is not in the same field as Sears. It still took a bit of a hit. So I'm going to be covering these three stocks here. So we have Lowe's, Home Depot. So Lowe's went down 5.56% today, $4.27. Home Depot went down 4.03% today, $6.18, and Best Buy went down 3.93% or $2.21. So of these, the least price to earnings ratio is Best Buy has a 14.75, 2.52 dividend yield, 2.42 dividend yield, and 2.27 dividend yield. So all of these stocks are within the 2% range. Of course, Best Buy is going to have the highest, but is it the most undervalued right now? And that's what we're going to take a look at. So we're going to start off with the Y charts here. We're going to take a look at Lowe's. So Lowe's, we can see for the year, their dividend yield is, or their yield is 1.92%, which is probably the highest that it's been in back since November of 2016. So you can see that the dividend yield for Lowe's, now Lowe's has been paying out dividend for 54 years. They've had continued dividend growth. They pay out their dividend payout date, or their dividend ex-dividend date is in 2 days. So basically it is on the 24th. So if you own the stock tomorrow and rolls into Monday, you are going to get the dividend pay. So that is why I'm looking at this right now. This just dropped, almost 5.5. It's 5.5% in just a single day. That means that it was in an upwards trend up for a while. Now some of these talks with Sears may have been in the, the back of people's minds, and that's why there was sort of a dip. But this is the cheapest price you could get it here for since back in early December. So since early December, prices have gone up, yield has gone down. Right now, prices are way down. Lowe's, they only pay out 35% of their earnings per share. So really low number. They've been paying out dividend growth for 54 years. Now this is a really great time to buy as far as what I, based off my view. Now taking a look at their statistics here, we're going to start off with this one. Their forward PE is 13, trailing PE is 22. They're held by insiders, only 0.14%, so very low percentage held by insiders. Held by the institutions, 77%. So there's only 23% held by investors and such outside of the institutions. The trailing 5-year dividend yield is 1.54. So this is the average for 5 years has been 1.54. We're getting an average right now of 2.13. It's probably, I think it's higher than that, but that's a great buy-in right now. 43% payout ratio. Let's go check out their financials, see what their quarterly looks like. So they haven't met quarterly estimates for the third, fourth, and second quarter. They met it for the first quarter. This isn't a stock where earnings, they play a good part and they don't play a good part. They still have continued gross profit, and overall at the end of the day they have continued to increase their net income, which is what is important. So financial wise, they look very healthy. And okay, on to the next one. So we're going to screen. So Lowe's right now, I would consider Lowe's a very much of an undervalued stock right now. You can see the yield is way up there. This is actually wrong. 1.92 is wrong. You can see that their continued dividend payout for the past, what was it here, 54 years has just had a steady incline. Even during the recessions in 2000, 2008, 92 recessions, they've just continued to been paying out. So this is a stock that, if held, will continue to pay you, especially if you're young and you buy lows. Your yield after yield increase will just increase and compound within years to come. So we're going to check out Best Buy next. Checking out Best Buy for the year, we can see that it still is slightly overvalued. That dip today didn't really affect it too much. Now, as far as overall, let's see here, where is my Best Buy is over here. So 5-day, they did go down quite a bit compared to their 5-day. They're down 1.92% for the week, or the year. They were on an upwards trend for the year. This isn't going to knock them down too high. They have a PE ratio of 14.74, yield of 2.52. So again, a really good yield for a really nice price to earnings. Let's see here. They've been paying out dividends, continued growth dividends for 5 years. They pay out 35%. And we can see that they've been paying out dividends since back in 2003. They've been paying out special dividends here. You can see that they have special payouts. They did have a bit of a hit back in 2008. They paid out, or they didn't have any growth during the 2008 recession, but they have continued to have continued growth for the past 7 years, or 5 years. So they didn't cut back their dividend pay, which is important, but they didn't continue it through the that last recession. But they have had some special payout, so that's kind of nice. Best Buy isn't one that I would hold for very long term, just in my opinion. There's one I go out to purchase electronics myself. I'll scan it with Amazon, and yeah, this may not be one. It's not undervalued, so in my view, it's not undervalued. We could take a look at its financials here. Its statistics for 5 years. Actually, let's go back to the summary here. We can take a look. It has beat earnings for the past 4 quarters, so it does look well there. Dividends 2.21%, 2.21. So it is under its 5-year average yield. So this is already. I'm not really interested in this. It does have a decent yield. It did go down a little bit, but it's not enough to make it something of a buy. Plus, I'm going to go ahead and exit out of these here. So on to the last one is Home Depot, and we can see for the year it just barely crossed right here. You can see the threshold for the median has been 2.12. It went slightly undervalued today at 2.15% yield. So this is actually, what's this, Home Depot. So Home Depot for the year, since this point, it's still up 8.05%. Has a pretty decent PE, pays out 2.42. And so this chart just shows me that they are currently undervalued for the year. Now 5-year, it doesn't look like they're currently undervalued, and that'll show up here when we look at their financials. So they are currently 2.33. They have met earnings for the past 4 quarters. 2.33. Their 5-year is 1.90. So actually, for their average 5-year, they are above their forward annual dividend rate, $3.56 or 2.33. 2.33. So yeah, I think they will bounce back. This is just, it's a dip. They're not coming up on a dividend date. I think they pay out next in October. So they pay out 369.12. So August 30th, this could actually be a good August stock. You actually have to own it on August 30th, and you can get that payout on September 15th. So I think Home Depot is a semi-buy. I wouldn't consider it buying it myself. Of the 2 stocks that I listed, I would definitely consider Lowe's to be one that I would buy myself. I think I will probably buy into it tomorrow because I'll have to own it Monday if I want to get paid, and I know it will recover that 5% loss for the day. That's, it's Lowe's, and they were an upwards trend. This bit of a dip here for 2 months, it'll easily recover. They've had time periods from August where they had some downwards from August until August. So about a year where they had a negative area here, but they recovered it. So this could last until next year of May, but at the same time I could be earning dividends, and I don't see them go anywhere. They've been paying out dividends for years and years. They're only paying out 35%. So do you think that Lowe's is a buy right now? Would you consider buying into Lowe's? Go ahead and leave that in the comments below. And of course, I want to thank everyone for watching up until this point. If you liked the video, hit that like button and please subscribe for future financial videos. If you have any questions, go ahead and leave that in the comments below. Thanks for tuning in, and I will see you next time. Of course, if you have any questions or want something screened, this is always a very quick screening process. Of course, Lowe's is well known. I shop there all the time for everything I do outdoors, indoors. They offer, a lot of veterans go there because they offer discounts for veterans and all sorts of different things. So I believe in Lowe's. So that is it for today. Thanks for tuning in. I will see you next time. Bye.